is thriving at SpaceX, with regulators in retreat.
Another record high for Wall Street. What are we talking about? 30 plus something, 35th? At this point, I wonder if we have to keep counting these fresh record highs for U.S. stocks. Of course, we have seen that enthusiasm over artificial intelligence, not to mention the expectations of 2 Fed rate cuts coming. Still, I gotta say, the gains overnight were a little bit muted. We're talking about a little bit of caution in markets this week. Of course, Heidi, you mentioned Powell's testimony to Congress, but we also have the start of the earnings season. So we're watching the latest coming out of these companies very closely. NVIDIA climbed in the overnight session because UBS Group raised its target, although we do see more trouble ahead for both.
New thing. If I had to think, that is a great opportunity.
Bit more of a retreat, if you will, even with this rally. Maybe with this rally, I should say, maybe there is a little bit of caution starting to creep in, given it is a big earnings week, it is a big Fed communications week, and of course, this sort of political risk is creeping in there as well, right? But take a look at the setup here in Asia. We've got, I would characterize this as sort of modest optimism, a mixed start. We're seeing that cautious trading ahead of Jay Powell's testimony to Congress and earnings starting to flood through from the US as well. Seeing equity futures in Australia looking like we'll see some muted gains as trading begins in the next hour. We're seeing Nikkei futures also modestly high, about a tenth of 1%. Watching China as well, of course, sort of still watching the communication challenges that are still piling up for the PBOC with these open market operations and what the bond market is doing at the moment. We're seeing that equity market continuing to extend those losses. Dollar China pretty steady at the moment, but when it comes to the Aussie dollar, we'll be watching out for the potential for further upside there. Potentially 2024 highs to be revisited. But Cher, as you were mentioning, record high after record high. We spoke to my own brand of cancel culture is thriving at SpaceX, with regulators in retreat.
I think the chance of a 10% correction is highly likely sometime between now and the election. Not just because of the election, but because uncertainty is going to prevail for a lot of different reasons. Earnings reasons, election outcome reasons, some of the things you mentioned earlier around tariffs, potentially immigration, Fed policy still remains uncertain. So yeah, I think the third quarter typically is that period and it's going to be choppy.
And our next guest says Haven assets will be highly sought after in the second half of the year. Joining us now is Hebe Chen, market analyst at IG. Hebe, great to have you back with us. Are you seeing any changes in risk appetite so far?
Good morning, Sherry. Lovely to be back. Yes, absolutely. I think that very few of us that stepping into the second half of this year that expecting a smooth selling, because we know that we have known a sort of unknown unpredictabilities in the market. And based on the last week, the first week of the second half of the market, we do see quite a bit of the shifty, quite subtle change in terms of risk appetite. For instance, we're looking at the safe haven asset, for example, the silver, the copper, the gold prices has been surging quite dramatically in the past week. By contrast to that, is we're seeing quite high risk beta assets, the cryptocurrencies dropping quite significantly. Of course, there's some of the other side reasons to drive the change there, but I do trust that as we're getting into the quite uncertainty time, that this quite highlights clearly that the safe haven or like safe quality will become a quite sought after quality when the investors looking into that which asset and allocation for the capital.
How important will this earnings season be as opposed to, say, where the Fed goes from here? Because we also have, of course, June CPI numbers coming out of the U.S. this week.
Yes, exactly. So the CPI, everyone's been holding the breath for the CPI, and that's not only because that we're expecting to get more update from the inflation, but also the quite significance coming from that is that we're marking a full cycle since the previous CPI that has helped the Fed to sort of coming out with the statement that they're seeing that this inflation process has picking up. So what the market is expecting is a 0.2% of month-over-month change. Well, a bit high from the last month, flat, no change. But what most important to the market is to seeing this trend, this inflation process has getting stabilized and then forming a trend for the Fed to starting talking about the cut maybe as early as September meeting.
Hebe, I'm watching China at the moment. Obviously, we've had sort of a flurry of communication from the PBOC, some more of these open market operations. But I do wonder, we're seeing this extended run of weakness for Chinese equities. Is this a new normal when it comes to, perhaps not much further downside for the economy, but certainly no great upside risk either?
Well, yes, you're right. I think the equities in China is definitely at the crossroad this week. We're having the China's inflation, always quite significant data of the month, but also is what everyone's waiting for is the next week's CCP's meeting to expecting some of the reform or potentially press the reset button for the Chinese economy. So at this stage, if you're just purely looking for example, the Hang Seng Index, it's only about one to safe quality will become a quite sought after quality when the investors looking into that. When the market's been waiting for that last mile to confirm that decision-making meeting, also the economy data to either reshape or either continue the optimism for Chinese equity. So I think this week is critical, as well as the next week will put it much likely to seeing a big change in terms of risk appetite for the Chinese equity.
Right, and you're of course talking about expectations ahead of the plenum. What sort of policy measures do you think we could get that would actually make a meaningful difference to market sentiment?
Well, based on, for example, if you're looking for the Chinese inflation data, even though we're seeing that the inflation data has been a positive area for the past 4 months, but if you're looking carefully into the monthly one, you can see that there's still not yet a quite sustainable, stabilized picking up in terms of a domestic consumption. I think that's one of the areas that I will be looking at, whether or not the policy can really recover that area. But of course, property sector is another one that everyone's been so waiting for, that if seeing that Chinese.
At the moment, obviously, we've had sort of a flurry of communication from the PBOC, some more of these open market operations. But I do
GDP in the past 2 decades. But apart from that, is any other thing that new drivers that they could introduce to forming the new engine for Chinese economy? I think there's a lot of things that we can looking at. The expectation for a groundbreaking is probably not that high, but what is in China is definitely at the crossroad this week. We're having the China's inflation always quite to revive the economy and to making the investors into the market feel the confident about the months to come, also the year to come.
A recent Bloomberg survey showed that investors were turning back to Chinese stocks, not to mention Indian stocks, and away from Japanese stocks, which had been really favored in the past year. Do you expect that trend to continue, or that sentiment to continue, if we continue to see the underperformance of Japanese eco data?
Well, I think there's two reasons for that sort of underperformance. One, if you're looking for domestic drivers, is the Japanese stock has been picking up so strongly since early this year, because one, that everyone expecting Japanese economy could sort of continue the momentum from last year. But based on the GDP for the Q1, appears that the Japanese economy is still quite struggling. They still cannot rule out the chance of a recession in the months ahead. That's one of the reasons. But in terms of the external reasons, external environment, as I think we mentioned earlier, the uncertainty there, we're still not sure what the global economy was stepping into, that were putting extra pressures on the Japanese economy, which is still quite struggling to recover sustainably. And also, apart from that, is what the Japanese future strategy, which are looking at into the AI or the technology leadership, whether or not they could really coming out as a solid result after this year's sort of the quite challenging years. I think there's all the uncertainties that have been surrounding Japanese stocks.
Hebe Shen, market analyst at IG. Always great to chat with you. We've got some deals news just crossing the Bloomberg when it comes to Australia. This is one that we were watching, the private equity firm Bain Capital, having had made that unsolicited takeover offer for the Australian automotive parts retailer Bapcor. That's now been rejected by Bapcor. That non-binding proposal from Bain being rejected to the offer of $5.40 Aussie per share. They've concluded that that proposal does not represent fair value for Bapcor, says the deal is not in the best interest interests of their shareholders there. So Bapcor is the parent company of Autobarn. It's a car parts outlet. They do car servicing amongst other things as well. So that $5.40 Aussie per share cash offer from Bain Capital has been rejected. We have seen shares falling almost 50% from about mid-2021. They've had a series of profit downgrades. So it'll be interesting to see if Bain comes back for another go.
Yeah, we'll be watching the market opens in Australia at the top of the hour. But coming up on the Asia Trade, we discuss the post-pandemic tourism rebound in Australia and around Asia. Hear why Aberdeen is overweight on Chinese and Indian stocks for the second half of the year. And we'll look at what's at stake in Narendra Modi's trip to Russia. This is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Australia and around Asia. Hear why Aberdeen is overweight on Chinese and Indian.
New episode Wednesday on Bloomberg Television.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Jumpstart your trading day with 2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Bloomberg Open Interest, weekdays at 9 a.m. Eastern, only on Bloomberg Television.
The bottom line here is that we're not going anywhere. I am not going anywhere. I wouldn't be running if I didn't absolutely believe that I am the best candidate to beat Donald Trump in 2024.
President Biden there pushing back on calls for him to quit the U.S. presidential race. Really
My politics editor, Laura Davidson. So, Laura, we're seeing, the same kind of note of defiance being struck by the president here.
Yes, this is, been the drum that he's been beating for several days now, saying, look, I am the nominee. I'm not going anywhere. And today, kind of this new line of, look, we're wasting time. We need to unify behind my candidacy, is what he's been saying. However, it is not at all clear that both Democrats and Congress, as well as his donors and top, aides and party people are totally behind that message. There are so far 9 House Democrats who have come out against Biden, saying he needs to step aside. Congress is meeting for the first time since the debate tonight, Monday night in Washington. So we'll see over the next course of the few days if more Democrats say he needs to bow out.
Yeah, Laura, let's talk a little bit about the wealthy donors, because that's where the money is. How much of an impact could it have on his campaign if they back out from really supporting his bid?
So if wealthy donors stop giving, as many said they have, or they're going to instead give to House and Senate races versus giving to the presidential race, that could have a serious impact on his campaign. It's important to note that Biden is probably not going to step down just because donors say so. However, it could be an important kind of piece of this consideration if he also has pressure from Congress, and if he particularly has pressure from his own family. That's been one of the sources that he's been listening to the most.
What's the timeline here in order not to get into a drawn-out power struggle that could actually affect the November elections?
So both donors and Democrats in Washington see this week as kind of this key timeline. You have Congress coming back. You have Biden, who will be hosting the NATO summit here in Washington over the next several days. There will be, he'll be under scrutiny from foreign leaders as well. So there's a lot riding on this week. At the end of the week, Biden will have what the White House is calling a big boy press conference, and so he will be, taking questions for a long time. This is something that he has not typically done, and it'll be really under the microscope to see, can he, does he have the stamina, does he have the vigor, is his speech, projecting that he has, confidence in what he's saying and fully in command of the facts.
Politics editor Laura Davison in DC. That'll be closely scrutinised for sure. We're staying with geopolitics, and Indian Prime Minister Narendra Modi has met privately with Vladimir Putin to begin his first visit.
Who have come out against Biden, saying he needs to step aside. Congress is meeting for the first.
Joins us now for more. So we're expecting formal talks on Tuesday after this private meeting. China obviously is sort of front and centre within the context of this relationship. What are we expecting?
Well, officially, they've suggested that there won't actually be any major deliverables from this visit. We don't expect any, but I think from India's perspective, it's about a balancing act and continuing this long-standing, strong ties between India and Russia. But as you mentioned, China's in the background. So India considers China a threat. They've had border clashes. Russia and China are no limits partners, as they say, and China is providing a whole lot of material to the Russian economy. And so there's a question of how does India balance that relationship with its desire to maintain strong ties with Russia?
How much has India really benefited from the geopolitical complexity around the world, given, of course, that India does want to maintain those ties with one?
This week as kind of this key timeline. You have Congress coming back. You have Biden.
So India is benefiting in the sense that Washington and the West in general, but especially Washington, are concerned about China. And Washington sees India as a crucial regional partner in addressing the challenge with China. India, of course, knows this, so they know they have more leeway than they might otherwise have, particularly with regard to the Western backlash against Russia after the war in Ukraine. And so basically what's happened is India has become the most important marginal buyer of Russian oil. They get about 25% of their energy imports from Russia at this point. The West is not happy about that, but they're not going to do anything to stop it. On the other hand, we've also found in the trade data evidence that India is increasing its exports of potentially sensitive or military industrial goods to Russia. So basically, India can get away with that because Washington's not going to do anything about it because of China.
And I do wonder how long they can sort of get away with walking the business now for more. So we're expecting formal talks on Tuesday after this private meeting as well. It's pretty interesting timing for this relationship.
It's pretty awkward timing, actually, to be filmed hugging Putin on the day that Russians attacked a school, or a hospital, whether by accident or not. But nonetheless, that is India's policy. India is not supportive of Russia's invasion of Ukraine, but they're also not condemning it either. They're basically trying to be neutral, but slightly less neutral in the sense of what they're sending and buying from Russia, and also this visit, which is a big deal. Not many foreign leaders are going to Moscow these days, and Modi is going.
Jardif People, great to have you with us with that context on the Modi visit to Russia, our senior geoeconomics analyst. Other political developments that we're following, the left-wing alliance that won the most seats in French parliamentary elections says it will nominate a prime minister in the next few days. Sunday's vote produced a divided parliament with no clear majority. The left's candidate for premier will almost certainly need to win support from President Emmanuel Macron's group, which won the second biggest number of seats.
Concerned about China, and Washington sees India as a crucial regional partner in
during an unannounced visit to Beijing that followed a similar surprise trip to Moscow for talks with Vladimir Putin. EU leaders have sought to distance themselves from Orban's shuttle diplomacy, which comes as Hungary takes over the bloc's rotating presidency. Orban heads to Washington this week for the NATO annual summit. We have more ahead on the Asia trade. This is Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
Mounting for Chinese stocks. The Hang Seng China Enterprises Index fell on Monday, declining over 9% from a May 20 high. It is now near the realm of a technical correction.
A rally in Chinese equities that started this year has lost momentum due to an uneven economic recovery. Investors are also not expecting a quick boost from one of China's biggest annual policy meetings next week. Morgan Stanley strategists now saying that investors are feeling no rush to return to the market, with currency weakness and China's macro challenges remaining near-term hurdles.
And Jerry, Oaktree Capital Management says highly levered assets within private equity.
Across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal.
Howard Marks, of course, a co-founder, thinks that's where the pain will come in the future. Risky corporate borrowers, especially those backed by private equity, have seen a jump in borrowing costs as a result of Fed hikes. And while in the property market, we've also seen the value of commercial real estate falling, while a slow-rolling wave of maturities is underway.
Right now, and I think going into the future, leveraged companies will not be able to renew their leverage as easily, and the cost of doing so will be higher. So that gives us better opportunities than we've been seeing.
Brace for impact. This is what we were talking about earlier about Morgan Stanley's chief U.S. equity strategist saying that investors should brace for that potential correction in the S&P 500 in the coming months. Jerry, you were saying we've lost track of how many record highs.
I think it's 30-something, 35th this time. But Mike Wilson telling us more about where he's seeing risks in the U.S. markets.
What worries me is that momentum is so strong and people have a lot more exposure to high multiple stocks than they think they do. And if you have an event that's unpredictable, then you could have a real reset on valuation of 10, 15%. Like, I think the chance of a 10% correction is highly likely sometime between now and the election. Not just because
stocks. The Hang Seng China Enterprises Index fell on Monday, declining over 9% from a May 20.
Some reasons, some of the things you mentioned earlier around tariffs, potentially immigration, Fed policy still remains uncertain. So yeah, I think the third quarter typically is that period, and it's going to be choppy. Now we're hoping that's going to create some opportunity. But
quick boost from one of China's biggest annual policy meetings next week. Morgan Stanley strategists now say
more exposed to tech than you think, especially if you're sitting in the S&P 500, which is what, 30% tech or so. I do want to actually talk about how all this rolls into price targets. And typically at this point, I would ask you what your year-end S&P 500 forecast is. But I know that you've backed away from those sorts of calls. And it was interesting. If you take a look at Friday, we got some news from Piper Sandler saying that they're actually going to drop their S&P 500 forecasts, that basically it's bad practice. And when you think about that, I mean, are we starting to see the beginning of the end of these big, bold S&P 500 forecasts?
Well, no, what we do is we rolled forward our forecast 12 months in May. So we take away our year-end target. And look, first thing I would say is S&P targets at a certain time and price is kind of silly. But what I would tell you is that the risk reward from here, we think is lower. Like over the next 4 to 6 months, for the same reason I just mentioned, we have volatility probably picking up in the third quarter. I would say your likelihood of upside between now and year end is very low, much lower than normal. I'd call it 20-25% that markets are higher between now and year end. Okay, specific target, I don't know, but let's say it's down 10% or so. Then we would get interested. Then we'd be interested to say, okay, maybe there's some things happening at the index level. Where the opportunity remains is at the stock level, at the factor level, okay? And in that regard, we still like sort of growth, but not just quality growth, but like, quality in general, large cap, good balance sheets, companies that can deliver on earnings, and that momentum will continue. It's just hard to find companies that are cheap. So if they were to come in 10%, then we'd probably get interested again. The chance of a 10% correction is highly likely sometime between now and the election. Not just because
view of that show Bloomberg's open interest. Take a look at how U.S. futures are trading at the moment, because we continue to see that extension of those gains that we saw on the Wall Street session. Of course, record highs again, 35th this year.
Yeah, I think the third quarter typically is that period, and it's going to be choppy. Now we're hoping that's going to create some opportunity. But
what will he say about the labor market? Will he downgrade his assessment after Friday's soft June jobs report is a key question. And is he sort of worried about the easing financial conditions? It would also be a question of mine.
Yeah, he's facing a lot of pressure from lawmakers who are growing impatient as to where we are at when it comes to this monetary policy cycle, where we're seeing rate cuts, particularly as we head pretty close to November. And again, it's that sort of tension between fiscal and monetary that's building, not just in the US, but a number of these countries that have elections or have just had elections.
And then we can't forget the incredible rally around the Magnificent Seven and the exuberance of artificial intelligence, right? All of that really filtering through the markets as we head towards earnings season. We have more ahead on the Asia Trade. This is Bloomberg.
Now and year end. Okay, specific target, I don't know, but let's say it's down 10% or so. Then we would get interested.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. When South Africa has an election, Bloomberg Television has it covered.
South Africans are very connected politically. They know exactly what they want.
In developing countries like South Africa, when there is one-party dominance for too long, we don't get that economic growth, we don't get accountability.
Whatever we do will be based on stability.
Nobody covers global elections like Bloomberg. Context changes everything.
I mean, it may not have been an exciting overnight session when it comes to broad levels on the S&P 500. Another record high, really big news there. But it was really TSMC's ADRs that really shot up and took the company to that $1 trillion valuation. Of course, perhaps not surprising given that, as we talked about earlier, that exuberance over artificial intelligence. But we also had a call by Morgan Stanley, which raised the target on the stock by about 9%.
Yeah, we're seeing TSMC just jump from strength to strength, right? We saw earlier it overtook Berkshire Hathaway in June to become the world's 8th most valuable company based on the ADRs, right? It is, I should point out, trading at a pretty considerable premium to its Taipei traded shares. In fact, you're taking a look at the gap of between what we're seeing in that $1 trillion market value to about $820 billion in the Taiwan listing there. But Morningstar, for one, saying that, yes, this $1 trillion milestone is a feat, but there's so much ahead when it comes to tech advancements extending at least into the 2040s.
And it's really interesting because you see the divergence of what's happening perhaps with this stock and what's happening across Japan and its chip stocks. Many of the big names, including Tokyo Electron, are trading sort of sideways after hitting those highs earlier this year. Let's bring in our tech reporter, Annabelle Drulers, to discuss why. Annabelle, what's going on here?
Yeah, well, it's been a really interesting phenomenon, as you said, that sort of underperformance we've seen in Japanese chip names versus some of their more global peers, and why they're looking vulnerable in particular. What we are seeing in Japan is just a huge amount of margin buying, particularly among retail investors. So what happens is you're pretty bullish on the outlook, you don't have quite enough cash, you go to your bank or your broker, you give them some cash, and then they top up as well. Standard procedure, of course. It's become extremely popular in Japan. You can see in this chart, we haven't seen this level of margin buying going all the way back to 2006. But what happens then is you have an extra element of vulnerability because, of course, if the market weakens, then investors need to close out their positions, and that can lead to further selling pressure and so on. That's the trend that we're seeing in Japan, most acute in the tech sector. In Tokyo Electron, you mentioned, actually that's had a nearly $300 million increase in margin buying just since the end of last year alone. That is the most that we're seeing for any company on the Topix 500 index.
As you said, most acute, but are we seeing other sectors that are being impacted by this as well?
Yeah, well, we often talk about sort of the picks and shovels in the AI trade, things like utility companies, infrastructure providers, things that are going to build the data centers. That's where we're actually seeing a lot of the margin activity in these sort of second order areas that are sort of adjacent to chips. So names like Tokyo Electric Power, Hokkaido Electric Power, for instance, they've both seen a pick up in positions. I guess the question as well is how much does this really matter and what's going to be the bigger impact? And some of the analysts that we're speaking to saying we could start to see some sort of impact once you get those earnings coming out. They're just around the corner, how positive those outlooks are. Of course, what the BOJ does, because if they do hike rates, even 25 basis points, that increase the cost of buying on margin. These are all sort of the things that we're still yet to see as yet.
Another tech company we're watching is in South Korea, Samsung. How's the strike and the labor action that we saw in that company going at this point?
Yeah, well, it's going into its second day. We know this strike is supposed to be taking place Monday, Tuesday, Wednesday of last week. So we saw people turning out yesterday, striking in front of the company's chips headquarters. Actually, more people than expected turned out for this. So the company, or the union rather, had been tipping around 5,000 people to turn out. Around 6,500 people came out instead. The company, or the union rather, is saying that it is going to be disrupting chip production. Analysts we're speaking to saying maybe not quite yet. This strike was very well scheduled or well signaled. A lot of the chip production is automated as well. Still, though, that's certainly something we're going to be tracking today. Do we start to get any further commentary? And what's also the turnout this morning, Heidi?
Annabelle Jewell there in Hong Kong with the latest. We're staying with tech, and today's Big Take takes a look inside Elon Musk's SpaceX, with former employees telling Bloomberg Businessweek about the frat house culture infused with casual sexism. And Sherry, we were both reading the story earlier, and it is just quite a story.
Last month, apparently 8 former staff filed a lawsuit in California that accuses SpaceX and Musk of sexual harassment and whistleblower retaliation. Our senior reporter Josh Edelson joins us with more. And Josh, as Heidi mentioned, we're really shocked at this story. What did these fired SpaceX engineers tell you about what was happening at that company, and how much really does this have to do with Elon Musk himself?
People who worked at the company say they were subjected to an environment that, as you said, was like a frat house, that was characterized by sexual harassment, by conduct including men saying that women were biologically incapable of being engineers, or staring at their chests, or making crude jokes that mimicked the tweets that Elon Musk was posting online. For example, when Elon Musk posted about a fictional university with an acronym about women's bodies, there then were men musing about which women that worked there would do well at that university. And those fired workers allege that because they did an open letter calling on the company to evenly enforce its policies, to put its culture in line with its official standards, they were fired in retaliation, that the company chose to go after people calling out misconduct and harassment in the company rather than people perpetrating it.
What's also extraordinary is the way that SpaceX has responded, right? Trying to get the Labor Board itself ruled as unconstitutional. There's a great quote where someone says, just because you sort of pound hard enough at the table doesn't mean you can stop a federal body from functioning. But in a lot of ways, is that exactly what's happening?
So as a reporter at Bloomberg, I have covered conflicts between the U.S. Labor Board and a number of the most famous, powerful companies in the country. What is different here is that when the U.S. Labor Board, which is responsible for enforcing not just the right to unionize, but the right to take collective action in the workplace, began prosecuting SpaceX over these workers' firings, SpaceX responded by suing, arguing that the Labor Board structure is unconstitutional. Other companies have taken up the same arguments, and that legal offense, this belt and suspenders and flamethrower approach that Elon Musk's company has taken, has put the government on defense, has led to the Labor Board's case against the company being frozen on hold, while at the same time, the company's case is proceeding and could change how labor protections are enforced throughout the U.S. economy. When Elon Musk posted about a fictional university with an acronym.
Account for this, or is this a sense that SpaceX with its budget versus NASA's budget is just too indispensable?
It's been interesting to see how SpaceX has repeatedly brought up its role as a federal contractor when it makes arguments in the litigation. And these fired engineers argue that the government should do more to hold its contractors accountable. NASA and the Space Force did not want to speak about SpaceX specifically. They, at NASA, did say that they are committed to a safe environment for their contractors. SpaceX, meanwhile, has denied wrongdoing in the litigation.
Bloomberg senior reporter Josh Edelson with this amazing story about corporate culture at SpaceX. As you mentioned, SpaceX has denied any wrongdoing and did not respond to our inquiries for the story. You can read more on this Big Take story on the terminal and on Bloomberg.com. We have more ahead. This is Bloomberg.
Unionize, but the right to take collective action in the workplace, began prosecuting SpaceX over these.